Next, we'll hear from Mr. Porter. Welcome.
Thank you. Thank you, Chairman Vitter, Ranking Member Sheehan, and members of the committee. My name is Jeffrey Porter, and I am a tax practitioner at Porter & Associates in Huntington, West Virginia. And on behalf of the American Institute of CPAs, I appreciate the opportunity to testify. Tax compliance is particularly burdensome on small businesses. While our tax code has always had a tendency to change, in recent years the rate of change has accelerated. New rules and regulations providing guidance on tax laws comes out daily. Extender bills pass annually and then expire within a month, leaving businesses once again unsure what the rules are. When a small business asks me a simple question such as, what is my tax rate? You have to explain that it's really not that simple because you have the regular rate, the AMT, the net investment income tax, and a variety of phase-ins and phase-outs. America's small businesses need a tax code that is certain, simple, and transparent. In preparation for this hearing, I reached out to several of my small business clients and asked them about the impact regulations have on their businesses. To say the responses was passionate was an understatement. And before I could explain that I mostly was interested in tax compliance issues, they began to talk about the IRS, the state taxing authorities, OSHA, EPA, the ACA, and a host of other acronyms for government agencies. While we are here today to specifically discuss tax compliance, we need to remember that the cascading burden of government compliance, tax and otherwise, takes the focus from an entrepreneur from expanding their business and hiring more employees to complying with laws and regulations. Today, I would like to discuss a number of targeted tax reform and administrative solutions, many of which are included in Chairman Vitter's bill, the Small Business Compliance Relief Act of 2015. Although technical, these changes are important and allow entrepreneurs to spend more of their time focusing on operating and expanding their business. So first, it's imperative that small businesses and their tax return preparers be able to communicate with the IRS when preparing their taxes and addressing compliance issues. Our members have expressed deep concerns regarding their ability to effectively represent small businesses in an environment where the IRS service levels are so degraded that during the last filing season, the IRS answered only 37% of their phone calls. And the IRS's processing of taxpayer correspondence in a timely manner declined by over 16% last year, leaving a backlog of almost 79,000 cases. Having to contact the IRS repeatedly to resolve a tax matter is frustrating and a waste of resources of both the business owner and their advisors. We believe taxpayer service must remain a high priority for the IRS and agree with requiring the agency to produce a report with specific ideas on how to improve its customer service. Another challenging tax compliance burden that small businesses had to deal with recently was the tangible property regulations, which address how businesses should report the purchase and improvement of tangible property. We appreciate the Chairman's bill, which includes a provision to increase the de minimis safe harbor threshold for most small businesses from $500 to $2,500. And provides an opportunity for more small businesses to use the higher $5,000 threshold. Currently, to deduct amounts higher than $500, small businesses must prove that expensing such amounts in the purchase year clearly reflects income. However, the clear reflection of income test can be challenging for any small business, especially for small businesses, forcing them to depreciate the cost of items such as computers or printers over a number of years for tax purposes. We also support the provisions in Chairman Vitter's bill that address some of the unfair or untargeted penalty provisions. Penalties should deter bad conduct without deterring good conduct or punishing small businesses which are acting in good faith. Targeted penalties that are administered in a reasonable manner encourage voluntary compliance with the laws. Good tax policy also suggests that we avoid strict liability provisions and instead allow the IRS to consider the facts and circumstances particular to a business's situation. Businesses that act in good faith should not be subject to the same rules as businesses trying to scam the system. The AICPA appreciates the committee's efforts and particularly wants to thank Chairman Vitter for his introduction of the Small Business Tax Compliance Relief Act of 2015, which we believe can ease compliance costs, improve the overall tax system for small businesses across the country. These businesses and their tax practitioners are interested in and need this type of targeted reform. Again, Mr. Chairman, thank you for the opportunity to testify, and I would be happy to answer your questions.
Thank you very, very much for your testimony. And next will be Ms. Bruckner.
Members of the committee and staff, thank you for the opportunity to testify today. My name is Caroline Bruckner, and I'm a tax professor at American University's Kogod School of Business. As part of my responsibilities at American University, I am also the managing director of the Kogod Tax Policy Center, which conducts nonpartisan research on tax and compliance issues specific to small businesses and entrepreneurs. Prior to my appointment at Kogod, I served on the staff of this committee from 2009 until 2014, ultimately as chief counsel under the leadership of its former chair, Senator Mary Landrieu. During my tenure with the committee, I handled tax, labor, and budget issues and worked with small business stakeholders across the country and political spectrum to develop small business legislation, including provisions of the Small Business Jobs Act of 2010, which provided more than $12 billion of tax relief for small businesses. In addition, at the direction of Chair Landrieu, I organized multiple hearings and roundtables to discuss tax and compliance issues specific to small businesses and entrepreneurs, and advised the chair on small business tax policy recommendations in response to Senate Finance Committee requests for tax reform proposals. In my current role at Kogod, I direct our team of small business tax policy experts, economists, and researchers, and we're currently focused on developing research on the tax and compliance issues impacting emerging entrepreneurs, who are America's latest iteration of small business owners. Emerging entrepreneurs are the new self-employed entrepreneurs who are powering the evolving on-demand digital economy. These emerging entrepreneurs are renting rooms, providing ride-sharing services, running errands, and selling goods for consumers in business transactions coordinated online and through app-based platforms developed by companies such as Airbnb, Flipkey, One Fine Stay, Uber, Lyft, TaskRabbit, Instacart, and others. As you know and have heard today, overwhelming complexity and inefficiency are the hallmarks of the current tax code. This reality is particularly acute for many emerging entrepreneurs who are first-time small business owners and have little experience with the requirements of quarterly estimated payments or self-employment taxes. As a result, many emerging entrepreneurs are finding out for the very first time this filing season that they're liable for tax underpayment penalties. In the coming months, we will be publishing research and corresponding policy recommendations for your committee and colleagues to review. In the meantime, we applaud the committee's initiative in discussing targeted tax solutions for America's small businesses. As many of you know, a one-size-fits-all approach for small business tax compliance burdens is inefficient and fails to recognize the specific attributes that the various criteria policymakers, academics, government agencies, and legal authorities rely on to characterize small businesses as opposed to other firms. The definition of small business has very significant implications for policy consideration purposes, as the numbers can vary widely. For example, the U.S. Department of Treasury has developed a methodology based on taxpayer filing information to identify more than 23 million small businesses. However, SBA's Office of Advocacy, relying on U.S. Census Bureau data, has identified more than 28 million small businesses for purposes of its programs. Consequently, a discussion of targeted tax solutions for small businesses should include some facts about small business as generally used for tax administration purposes. According to GAO's most recent research released this week, small businesses are primarily individuals who report some business income either as a sole proprietor or a landlord on a separate schedule together with their Form 1040s. This group of approximately 16 million small business taxpayers, which is about 69% of all small businesses, on average earns $100,000 or less per year and generates $1.4 trillion of the total small business income reported to the IRS every year. In contrast, the remaining 7.3 million small businesses, which is about 31% of reporting small business income, are partnerships, S corporations, or C corporations that earn on average about $450,000 or more per year and generate approximately $4.5 trillion of total small business income. Given the foregoing facts regarding small business taxpayers, it's no great surprise that millions of small business owners, mostly individuals running businesses and earning less than $100,000 each year, are unnecessarily burdened by an antiquated tax code and an IRS that cannot address their questions. Targeted tax proposals can alleviate some of the burdensome record-keeping requirements or inequitable treatment small business owners sometimes encounter in complying with the code. This committee has a long history dating back to its days as a select Senate committee of working on behalf of America's small businesses on tax issues. Beginning in 1953, this committee prepared a comprehensive survey of the impact of federal taxes on small businesses, culminating in an annual report to the Senate with key recommendations. Since then, this committee has held more than 38, now 39, hearings over the years on tax-related concerns of small businesses. The work continues. Again, I thank you for the opportunity to testify today and for the work you do on behalf of America's small businesses. And I welcome any questions from the committee or its staff.
Thank you very much, Ms. Bruckner. Now we'll hear from Mr. Zerbe. Welcome.
Thank you, Mr. Chairman. Appreciate it. Thank you very much for having this important hearing about tax reform and how tax reform can help deal with the burdens for small businesses in terms of tax compliance. Just as a brief note, Alliant Group works with small and medium businesses across the country, working with them to help them benefit from the tax code, the tax provisions that you all have placed into the code, and also working with CPA firms very closely to assist them in their working with their clients. We also work with small businesses representing them before the IRS, so have a good sense of knowledge of the issues before you. Mr. Chairman, when I think of what you're trying to deal with in this, in terms of the tax code and small business, I step back and think of kind of 3 points. One, you want to talk about policy and say, okay, what can we do to make sure the policy, the tax laws, the tax regs are working for small businesses and understanding the problems there. I gave you a lot of detail on the R&D credit in my testimony, but that's just a one-off. We have provision after provision after provision in the tax code that is very difficult and hard for small businesses to qualify for. It can be the law, it can be the guidance. You heard the testimony earlier from the question from Senator Ernst. Sometimes it can be they learn about it later, or it's very cumbersome, like the work credits. So I think understanding more in detail why is it that a small business can't take this credit is critical. I think that then leads you to the next step of, okay, now that we understand the problems, now let's talk about what could be the solutions. What can we do to make this code provision, this incentive work better for small businesses? And I think that could be safe harbors. It can be things that you propose, different rules for small businesses. All those are ways that you can get there to get small businesses able to take advantage of the credits and incentives that are in there for the code. I would say as a general rule, simpler is going to be a better place for you to do. But I do think thinking about ways that you can have a credit or provision that works for small business is also a start point. So I think it's getting the policy right. Then it's education. I couldn't have asked for a better with, again, the statement from Senator Ernst to the question. Education is huge. So many small business owners do not have a clue in the world what is out there for the credits and incentives that the Congress has put forward. It's what I spend all my days out there talking to them about what's out there that you've put forward. We can do so much more. To be honest, the IRS is not really pulling oars on this. I know they've got a lot on their plate, but they could do more to help other tax service providers that are trying to educate folks on what's going on. SBA may be a way to do this as well, too, but I can't tell you enough how much small business owners don't have any idea what's out there for them to take advantage of. So I think education is a key part. Third part then is compliance, and there's 2 parts to compliance. One is service. You heard it earlier, it's exactly right. IRS not answering phones, IRS not answering letters, people who don't have good training at the IRS, that's not a happy day for a small business owner and their CPA. They want people who will respond to their phone calls, will answer their letters, and know what they're talking about. So I think the committee has got to look long and hard about the level of professionalism and service that we want to see out of the IRS, the resources we want to see for the IRS to accomplish that, and also management of the IRS's resources that they currently have. But we've got to look at that. So if you can get the law better, if you can get education in a place where people know they can qualify and how they can qualify, you get service better, better guidance. What you're talking about, I think, is exactly spot on, Chairman. All that, I think, will then get you to the bottom line on the enforcement. It'll help the burden on compliance, but it'll get you to enforcement as well, too. And I think you'll be in a better place in enforcement. Obviously, the IRS needs to have an enforcement presence, but I would tell you, quite frankly, and I put it into detail in my testimony, we're a little bit afraid the IRS does not have its feet on the ground on some cases in some enforcement. Overall, yes, it can be fine, but the trend line is not good regarding small business. They tend to have a tendency to treat small businesses like big businesses in terms of requirements for what they want to accomplish in terms of record keeping, production of data, all that. So I've laid out some details for the committee in my testimony. A lot could be done, I think, to get the IRS back on the rails in terms of where they are on that. So I think all that can accomplish a great deal in terms of what you're looking at and trying to achieve. I just want to take one last moment on the Startup Act, just because, let me say this, I think as you're looking at reform, I gave you 3 areas that I think this committee in particular should think about in reform: entrepreneurs, greater employee ownership, and also capital for startups. But the tax code right now does a pretty lousy job of helping startups because they don't have income, and we're basically based around that. But the problem is, for a business owner, they are paying tax. They're paying a lot of tax. They're paying, for them, it looks, walks, talks like a tax. We put it with different labels saying, what's a payroll tax or it's this kind of tax. For the business owner, it's a tax. And I think for Senator Coons, his proposal that says, hey, we are going to make the R&D credit available for startups being the driver for both innovation and for new jobs in this country, is a godsend. I think it's going to be a game changer in really helping so many of our new innovative companies across the board finally take advantage of the R&D credit. I know senators make lots of wonderful speeches about, geez, R&D credit, we're going to help those two fellows in a garage who are starting that new business. Simple reality, it doesn't help them a bit. It helps IBM, it helps 3M, it helps a lot of the companies that we work with, kind of the 200-person tool and die shop, but it doesn't work for them. So I think with Senator Coons' provision that just got passed the other day, congratulations, Senator, we're on a good start on there. But that's just one example of a host of things that are out there. And with that, I'll stop, and thank you very much, Chairman, for having today's hearing.
Great. Thanks to all of you for your testimony very much. Now we'll go to Senator Enzi if he'd care to stay, but if he can't, we understand. Okay. Yes, thank you. In that case, we'll go to Senator Fisher.
Thank you, Mr. Chairman. This would be a question for the entire panel if you would like to weigh in on it. The Senate Finance Committee marked up tax extender legislation that would reenact all the provisions that expired in December of 2014. So if these provisions are good enough for the past decade, and in many cases almost 30 years, such as the R&D credit, then shouldn't they be made permanent? I hear about the 179 deduction all the time. More than 21,000 Nebraskans work in equipment manufacturing, and that's about 1 in 5 Nebraska manufacturing employees. Sales of goods produced by equipment manufacturing and related industries are almost $3.4 billion. So my constituents would like to see a longer extension of this deduction, allowing up to $500,000 to be expensed in a given year. So do any of you have objections to making it permanent? And if so, what would you propose instead?
I guess I'll start,
We'll
Senator.
let the gentleman from Omaha go
Thank you,
first.
Senator,
It's
very
great
much.
to see.
Thank you very much. Glad to see my Omaha ties have finally come in handy. And I think it'd be terrific. I think speaking for everyone, 179 little d in particular, if I had to pick one out, that would probably be it, along with the R&D credit, because they are based on behaviors that you're trying to affect. I think you're absolutely right, though. It's really the devil that you have this stop and start in terms of the tax provisions, and to get those put into permanency would be a godsend.
I think it was really encouraging to see that the 2-year extension for the 100% exclusion from cap gains on 1202 stock, which is investments into certain qualified small business stock. Senator Vitter, Chair Vitter, your bill builds on that specific provision in a number of ways. We know that that provision operates to get equity into the hands of entrepreneurs, and it would likely be a very successful provision in the code if it were made permanent at the 100% exclusion level.
I likewise agree completely that what we need more than anything is permanency in the code. The in and the out, constantly, it's maddening for clients and it's maddening for us. I mean, I have clients that have me on their speed dial in December and they call me every other day, has the bill passed, has the bill passed? So I think it's a huge issue. And then passing them late in the year, as we've been doing, ends up to the point where, clients don't have the ability to go out and invest like they need to invest, and they keep waiting and waiting for that. So I agree. Many of the provisions need to be made permanent.
I would echo the same thing. NSBA is very clearly in support of making them permanent. This is the roller coaster I referred to in my testimony. This is the knowing, not knowing, pass, expire, try to get it redone. This is a mess and needs to be fixed.
Yeah, I joined the course. This 179 in particular is one of the items we hear about repeatedly from our members, especially in December, wanting to know what the chances are that Congress is going to pass this, at least for the year that just happened. And so we, of course, support permanency. Our members always want the opportunity to be able to plan ahead. If we can't get permanency, we hope to at least get something that looks as far ahead of time as we can.
Good to hear. It is such a problem when there's no certainty for businesses. And as you said, you receive hundreds of calls, thousands of calls as the deadline's approaching, and people don't know how they're going to make decisions that's going to improve their business. Mr. Porter, earlier this year I introduced legislation which was the Taxpayer Accountability Act, which would require the IRS to provide a substantive written response, not just an acknowledgement letter, to any written correspondence from a taxpayer not later than 30 days after receiving such correspondence. And if the IRS discloses any taxpayer information to any federal, state, or local government, to provide that to the taxpayer in a written notification within 30 days. Do you think that would help to resolve some of the issues that you highlighted in your testimony?
Yes, ma'am, I think it would. And let me give you a scenario of how it typically works in my practice. Client comes in with a notice from the IRS, and so you have to provide some supporting documentation. Notice may be right, may be wrong. So you send in a letter. And 45 days later, you get a letter that says, we haven't had time to look at your letter yet. So then, you say, okay, 45 days later, you may get another letter. So now you're out to 90 days. But in the meantime, the computers are generating notices every 30 days, adding additional penalties and interest, threatening liens and levies. And so what that means is you have to call the IRS then every time and say, hey, would you put a hold until we get some kind of response to our letter? It would be hugely helpful if they would acknowledge that they received your notice and let you know that they have it and that they're going to cease any collections activities until, they resolve your issue.
If they don't acknowledge that they receive your notice, then the fees continue, right? The fine.
The penalties and interest?
Right,
Oh,
yeah.
absolutely, and until it's resolved. And of course, if it's resolved in the favor of the taxpayer, those go away. But again, it's the client comes running in the door with that letter again, and you'll call the IRS after you set on hold for who knows how long, and they'll say, yeah, we have that. I can see it here in the computer system.
Okay. Thank you very much. Thank you all.
Great, thank you. And Senator Coons.
Well, thank you, Chairman Vitter and Ranking Member Shaheen, both for holding this hearing. It's great to be in a room where we can agree on a lot of different things. One in particular, I suspect we've heard from a lot of different folks on both sides of the aisle, is that when it comes to tax reform, the stakes couldn't be higher for small business. And I suspect that every senator who's been here in question and every witness who's testified has suggested that America's tax code today is too long, too complex, frankly, too unfair for small business, and that the $100 billion a year roughly spent in tax compliance is a cost that we should find a way to reduce, that the complexity of the tax code and the difficulty and expense of tax compliance put small business, innovators, startups, and families really at a significant and unfair disadvantage. Senator Fisher's left, but I was going to agree with her that Section 179 permanency is something I would also support and advocate for. I grew up in a small business owning family, and I hear week in and week out from Delawareans who are trying to run small businesses exactly the points that our panel testified to, which is that they have great difficulty understanding, accessing, affording, taking advantage of the incentives that are provided in the tax code for small business. And that particularly the ones that expire year in and year out are of modest helpfulness, particularly when they seem to always be retroactively enacted. So let me speak for a few minutes, if I could, to the Innovators Job Creation Act. I am really grateful for the opportunity to speak to that, and I really appreciate Senator Enzi working with me initially and Senator Roberts being the co-sponsor of the provision that, as Mr. Zerbe mentioned, was included in extenders yesterday. One of the key areas, I think, for tax reform and for us to look at in tax policy is innovation. The R&D tax credit has made a huge difference, particularly for very large and very profitable companies over a long period of time. And as someone who is in-house counsel to a company that relied on that to help finance its investments in cutting-edge research, I think it is a positive thing. My very first bill as a senator was permanency for the R&D tax credit. But finding ways to make it accessible to early stage and startup businesses is a challenge that eluded me for a number of years, and that's why I first worked with Senator Enzi and then with Senator Roberts. The Innovators Job Creation Act allows the R&D credit to be claimed against the AMT, the alternative minimum tax. So even if a company is entitled to the R&D credit, many pass-through entities cannot claim it because the R&D credit can't be used in its current form against the AMT. 8 out of 10 businesses that could otherwise benefit from taking the R&D credit get little or no benefit because of the AMT. And this was previously in the Small Business Jobs Act of 2010, but expired after a year. So working together, we came up with an innovative solution to solve a major problem. If a startup company cannot access the R&D credit because they don't have an income tax liability, which most early stage startups don't, then they can claim the R&D credit against the taxes they pay on employee wages. So I'm very pleased to say that Senators Roberts and Schumer introduced this provision in Senate Finance Committee markup, which was adopted unanimously as part of the extenders package. And it's my real hope that it will ultimately become a permanent feature of the R&D credit and that we will ultimately get to a permanent R&D credit. So if I might, in the time we've got left, Mr. Zerbe, I'd welcome your thoughts on this particular provision. You've been a strong advocate of boosting access to the R&D credit for all businesses. What types of businesses do you think will benefit from this, given previous testimony about how difficult it is sometimes for small businesses to be informed of and aware of and to access? What recommendations would you have, given that this looks to be on track to be in the extenders for accessing it? And before I conclude my question, let me simply say I am eternally grateful to J.J. Singh of my staff, who really helped lead all the very hard and disciplined work on this. He's been a tremendous contributor on many different areas, but this one in particular, he should take all the credit for. I'm just the person who gets to say publicly, I get to have my name on the bill, but it's really his work that's helped make this possible.
Yes, JJ's been fantastic, and I'm very sorry that I understand he's leaving your staff. I don't know if you didn't know that, but
It's no, I'm well aware it is my loss, but Delaware's gain. He's going to move to Delaware, which I'm very excited about.
And you're right to pointing out the AMT turnoff, which I was so keen on getting into the refundable piece. But that, Mr. Chairman, goes right into the point I meant. The reason small businesses can't take the R&D credit, the key reason is the AMT. I mean, there's a legal bar to doing, and that's kind of just a good example. It's not just for the R&D credit, 32 other credits they can't take because that AMT bar for pass-throughs, that's just the devil if they can't take it. So yes, I mean, that will be a massive change. We had it in 2010 for 1 year. It was just a sea change for folks being able to take it across the board and across the country. I think for the startup, I think of the startup, the refundable piece of it, that'll be for new businesses and startups. I think that the industries that'll be particularly benefiting from that, Senator, would be biochemistry. We saw that with the Qualifying Therapeutic Discovery Project that we had, which is almost a version of this that was in the Affordable Care Act. I think biochemical, pharmaceutical, I think anything in the medical field will all be very good targets for this, folks that are trying to find the new. But I think the great thing about, in a sense, working this with the R&D credit is that the R&D credit is wide as the ocean. In other words, it's not Congress picking winners and losers and saying this is who should get funding, this is who shouldn't get funding. So I think you're going to actually encourage more folks to say, hey, I want to do that. I want to make that try. I want to make that leap to that new company to try this because I know that this provision you've put in place is out there. So I think it'll be very broad geographically. That's one thing we learned from the QDDP is that this kind of provision isn't going to be limited to just, one valley in California or one part of Route 128. It'll be across the board. That's what we found working with companies on the qualifying therapy. It'll help all sorts of businesses throughout the country, and I think all types of businesses. But I think those are the specific ones. I think you're right. Education is going to be critical because if the small businesses have difficulty, the startups are going to have a greater difficulty in doing it. And I think you've done a wonderful job, though, of making it pretty clean and clear how it's going to work and operate. And I think that helps a lot. The rules are pretty clean and simple. It's when you get into, hop on one foot, wear a pink dress, have a bow in your hair type of provision. That's when small businesses and CPAs say, maybe not worth a candle. So I think you've got, thanks to JJ and your good work, you've got a nice, clean bill. I think it's going to be a challenge to educate. We're certainly going to be doing that and working with other folks who are very much champions of what you've done. But you're right, that's going to be the big second piece of the challenge to that. And then it goes to the point we were talking about, Mr. Chairman, is making sure for the IRS that they implement this properly with service, that they're doing it properly, that they're, not there. Because if folks think there's a root canal at the end of the day when they're going to take this, they're not going to take it. So we need to make sure that the IRS is working with them on that. And I think we can accomplish all that and have a real success here.
Well, thank you. Thank you very much for your input, for your enthusiasm. I hope all the committee members will take up the opportunity to reach out into our home states and communities. And I really am optimistic that this great work product that Senator Roberts and Senator Schumer played such a central role in getting into extenders will actually be of meaningful benefit to a very wide range of sectors and companies. And I look forward to making sure that implementation goes as well as possible. Thank you very much, Mr. Chairman.
Thank you, Senator. I certainly want to agree with several comments that have been made, including the need for greater access to the R&D credit, including the need for greater permanency in general. We don't get nearly the bang out of the buck we should from these provisions when we let them limp along by extending them for short periods of time, either at the last minute or actually retroactively. We just get a pittance of the economic bang for the buck that we could if we made them permanent, and certainly including Section 179 expensing, making that permanent, and I'm introducing legislation to make it permanent. Again, to reiterate, this discussion was meant as a prelude in part to a markup we'll be having fairly soon on my Small Business Tax Compliance Relief Act. That's a collection of significant small business tax issues. I look forward to it getting a wide bipartisan support in this committee, and we are completely open for suggestions from all committee members as we work toward that markup. I'm introducing the bill today, but that's certainly not the end of the discussion. It's the beginning of the discussion. And so we're actively reaching out to every committee member to work toward a markup and come together for around a really strong bipartisan committee product focused specifically on key small business provisions. Won't be overall tax reform, won't be everything I'd like to see. It will be very significant provisions that mean a lot for small business specifically that we can move forward on, hopefully sooner rather than later, and not wait on the whole world and the whole tax code being solved to pass these common sense reforms. So that's the idea behind it. Again, thanks to all of you for your testimony. Thanks again to our first panel for their testimony. And with that, our hearing is adjourned.